Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for Wednesday, January 21st, 2026. Turn off my picture there. Title today, Equal but Opposite. I lost yesterday, I made today. They kind of crossed each other out. Now what happens? Well, it was almost an equal but opposite. We'll look at the candles in a bit. But what will we see tomorrow? I mean, as of 7:06 p.m. Eastern Time when I'm doing this, the futures are up a little bit. Dow's up 50, E-minis, Nasdaq only almost 80, S&P E-minis 14, and the Russell's up 2. Gold is down a bit, and Bitcoin is at 89.6, so it's down 610. Not that much. After hours action, not a lot of earnings. IPAR was up 6%. Carmen in the defensive space was up 6% on guidance. BANC and KNX lower on earnings, 4.5 and 3.9%. And then WINA up 4.6 as it'll join the S&P small caps. Earnings are coming, folks. Get ready. Again, my name is Jeffrey Scott. I am the Market MRI Pro at gmail.com. My Google group is called Top Down Trader, and my website's marketmripro.com. As always, these videos are for educational purposes only. My intent is to show you how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I've got tools in multiple platforms. We're going to use the Market MRI Pro app this evening. I was very pleased to participate in a meta stock program at lunchtime today where I got to demonstrate that tool set. My Google group's called Top Down Trader. It's the only mailing list I keep. And the good news is you put your name in when you want. You can take it out when you don't want to be there. You just go to Google Groups, sign in, go to all groups, find Top Down Trader without the hyphen, and let me know how you want to be contacted. Why? It's free. You get notification when I do videos. You get invited to member-only events. And if I ever don't have a deep discount on my product, you can get additional discounts over what I'm offering. For example, during Black Friday, you don't get the $100 discount that you get for Top Down Trader as well. Know your news and earnings. Tomorrow should be interesting. We got jobless claims for January. We got Q3 GDP first revision. Seems to be old. But then, boy, do we have old stuff. Personal income from November, the PCE report, core PCE. I'm just not sure how relevant they are because they are delayed. But I guess the November, we'll have to see. And then on Friday, we'll have consumer sentiment, some PMIs, etc. I mentioned earnings are coming. You got P&G before the GE Aerospace, Huntington Bank, Abbott, ACM Research before the open. You got Intel afterwards. A number of other big earnings announcements Thursday and Friday morning. And then next week, we really start earnings Lollapalooza with lots and lots. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. I have a free mentoring program I'm doing January 31st. Spots are limited. Registration link will be in the remarks below. Who should attend? Stock and option traders, owners of my tools, even if you don't own my tools. I'm going to go through top-down investing, sort of the words and wisdom and things I've learned from Ian Woodward and others. I'll demonstrate real-time how I analyze market sectors, groups, and stocks, show you some of my favorite scans, and then we'll talk a little bit about options and how I use them as stock replacements. And I'll walk you through 2 or 3 of my active trades and how I protected them during this volatility. For more information about anything I talk about or the program, marketmripro@gmail.com. If you already own the program and you had some technical issues, especially going from the freestanding app to the Windows Store version, coding at marketmripro.com, and consider joining the Top Down Trader Google group. All right, welcome to those folks I met earlier today in the MetaStock program. As I mentioned during that program, I have tools in TradeStation, TradingView, wealth charts, MetaStock, and then I've got the freestanding app. The basics are similar. Each program though has some special sauce. I tried to put as much as I could into one program, and that's the app which we're going to use tonight. But unlike Metastock, I don't have Australian data, India data, British data, and I don't have the same ability to bring in third parties and a number of things that I can't do here. But what I can do, I'm going to show you 30 minutes of how I analyze the market, and I got a pick for you tonight. If we look at the one-day returns in the U.S. markets, Russell led up to almost 2%, Q's 1.35, Diamonds 1.23, and the Spider 1.15. Um, if you look over here, you can see we finished in the upper parts of the range, especially the Russell. The Bitcoin was up 0.69 during the day. It's off after hours. Dollar was up 0.22%, and volatility was down big, 9%. What was really impressive is if you look at 12 months or 52 weeks, new highs minus new lows on the NYSE and the NASDAQ, they rocketed higher today. I think we were at +2 yesterday on the NASDAQ. That just shows you how much we had a reversal and an improvement in breadth over yesterday. Over here you can see instead of being 25% of the stocks were up, 86% of the S&P 1500 were up, 65 of the NASDAQ, and 79% of the NYSE. That is really good breadth, folks. And if you look at percentage of sectors and industry groups up compared to the prior day on each of these indexes, you could see marked improvement in breadth. If we look at the sectors in the S&P 500, it's important to realize these are just the big 500. You could see we were led by energy, materials, discretionary, healthcare. Everything was up. The laggard was staples, utilities, and real estate, the more defensive plays. Not a big surprise. Big day in the markets. If we look at themes, oil exploration and production, uranium, lithium, autonomous driving, all up 3%. Almost 3 semiconductors, genomics and biotech, home construction, transports, more biotech. Was anything not working today? Well, let's see, we got gold miners, silver miners, cannabis are all weak, and probably if we see some stabilization in the mud throwing between us and the EU, you'll probably see them come down significantly. Hope you took some profits, trailed up your stop. And then the other thing that was down was software, which just can't get ahead of itself. So from a breadth perspective, from an index perspective, it was a big day in the U.S. markets. If we look at the timing brief, the weeklies are in a buy. Remember, you have to be above the WMA with a blue buy on the bongo, and you stay in that signal until you have the first day that's opposite, red and below, both factors. So all of the weekly, Spider, Qs, Diamonds, and Russell, they're all in a buy zone. If I look at the dailies, clean that up, you can see nice candles across the board, but the only daily that is in a buy is the Russell. So just as we were over the weekend with the Qs already turning down, and then Monday and Tuesday were joined by the Spiders and the Diamonds, we are still pulling back in an uptrend, and it remains to be seen if this is going to be just a shallow pullback. Maybe we've already seen the bottom if you see the candlesticks from today. I don't go short when the weeklies are in a buy, but I raise cash when the dailies go to sell. So I'm still sitting on some cash. I didn't deploy much today. I want to see what we do tomorrow. I'm still pretty heavily invested in, like I said, today was a good day, but equaled out yesterday. If we look at the U.S. index ETFs, whoops, wrong one. Let's hit this one. We'll start with the spiders. So we've been talking that we could see some sideways movement for a couple of days in the indexes, but the spiders bounced off the 50. Not a great close as they traded higher earlier in the day, but they were up 1.15 on the day. If we get through the next couple of days, as we get later in the month, we run up to the middle of February. So we are in the weaker part of January, but there is light ahead. Big volume day and definitely improvement over yesterday. If we look at the Qs, I find it really remarkable. They pulled back to the 100 day simple, which I normally don't even look at, the last three trading days. Big bounce, same story about seasonality, might be sluggish here. And then we seem to have some positive seasonality at least until the middle of February. If we look at the diamonds, they've been doing pretty well. They didn't even get down to the 50 and had what looks like a reversal today, and their seasonality here is a little bit better than the others. And then lastly, the one that's been leading, the one that set an all-time trading high and an all-time closing high today, the IWM representing the Russell 2000 ETF. And you could see that here kind of looks okay. Oh, what do I have to do? I just got to turn that thing off. Kind of looks okay from the perspective, at least short term, on the seasonality. So Russell looks okay. So I'm feeling pretty good again. Obviously, it was an unusual day on Tuesday, but right now I still think we're going higher. If we look at the VIX, this is the one fly in my argument. Notice the big pop that we saw in the short-term VIX futures yesterday and a big pullback today down on this measurement 16.75 on the short term. But notice we've been tracking higher here. So I don't necessarily believe that we're done with the volatility. And the dollar, which had been pretending to go higher, broke yesterday and today had a bit of a recovery, not too much going on with the US dollar here. On the commodities front, take a look at a couple things. Gold still finished higher today, up 1.5%, but finished well off the highs. Does gold go down here and maybe fill some of this gap? Well, it's certainly extended and it's had a major run, so it wouldn't be a big surprise. What about silver? Silver actually came down some today, traded down 1.68, and a similar story. It probably needs a little bit of a pause and some sideways movement to burn off some of the extension and aggressiveness in this market. If you look at oil, oil is really going sideways and going nowhere. It did break above the trend line, but there's so many cross currents. Hard for me to trust oil here. However, natural gas had another massive day today and finishing up 10%. And we'll see what happens at the 200. Is this the time? So on the Metastock, we talked about EXE and some of the other gas-related um, explorers that are probably going to benefit from this massive increase. The 10-year, it came down some today. It was down 0.75%, but it's still way up from where it was last week. Friday it was higher, and then you see what it did on Tuesday. Came back a little bit on Wednesday. And then the 30-year looks about the same. Yes, it was down today, but it's still elevated. Down almost 1% today. Excuse me. Long day. Hence why I'm doing this early. Next thing I like to do is look at my buckets. The buckets give me a sense of the distribution of stocks in their Bollinger Bands. And I would say NASDAQ is neutral, 10% above, and 6% below. Big improvement from where we were yesterday. Russell 2000, the S&P 1500, the NYSE are both are more bullish than bearish, but no extension. 15% above on the Russell 2000. It's interesting. Let's look at the 13-week new high, new low before I get excited. If I look at the market breadth with the 13-week, you can see major rally today, 0.75 on the spiders and 0.84 on the S&P 1500, 0.63 on the NASDAQ, 0.86 on the Russell. As long as it's below 0.92, 94, I'm not too worried, so we can still go higher from here. But a big reversal, you can see the reversal in that short-term overbought, oversold indicator. If I look at the ratio charts to get a sense of what's leading, it is materials, it is energy, it is staples, and it's industrials. Definite market rotation because you don't see communications nor technology in my leadership group. If I looked at the sector non-timing and just from standing back, do I see any new one red bar? I don't, although you do see improvement everywhere with the daylight today. Staples look really strong here. Healthcare looks like it'll flip to positive at the end of the week. Materials and energy strong, like we mentioned, as is industrials. Communications weak. Technology is trying to get back, but overall is weak. Discretionary rather. Here's technology, same story. And Bitcoin, as we can see, a decent day today, but well off of its highs and trading lower after hours. If we look at my key stock timing, just a real quick run through some of those stocks that many of us own in our, especially in our long-term portfolios. Amazon, kind of disappointing. I thought maybe Amazon was going to do something, and Amazon really hasn't done much of all at all. And you could see it had a nice reversal candle with a long-legged doji today. Got to get above the moving averages to excite me. Apple, same thing. Google, what a beautiful day. Stopped right on the moving averages and reversed higher. Google looks like it wants to go higher. I have a position in it. Meta has a ways to go to earn my trust. Got to get back above the moving averages. Netflix, boy, did it just screw the pooch on seasonality. Its earnings weren't that bad. Maybe some of its estimates going forward were questionable. I think this sell-off is all about one thing, and that one thing is what are you going to do with Warner Brothers Discovery and how much you're going to pay for it, what's going to do to your balance sheet, and change your operating margins. So Netflix remains in takeover hell. Tesla trying hard to get back. I wouldn't touch it until it gets back above the moving averages. If I still owned it, I'd probably be holding it. It's Tesla. We know it's going to go to new highs eventually. Nvidia, I've thought it's going to do nothing until it has its earnings. Yesterday was bad. Today was good. Is it that much different than where we ended the week? No. We're still down from last week. And I'll hold to my idea. It's waiting to get its earnings out. Microsoft is in the no-touch zone, just continues to drop like a falling knife. Labu Biotech really had a great day today. Surprising. Again, I've trimmed my positions. I ran up most of this here, and it's been kind of choppy now for several months. But it had a strong day today, and I'll take it. Pharma, which is a little different because of I think a biotech is a lot of small companies who are developing products and who will be valued ultimately by how much revenue they'll generate. Revenue is dependent upon two things, unit volume and unit cost. And the government is trying to reduce cost. Takeouts are related to future revenue, so all of that probably kills their downstream valuation. But we're seeing takeovers now. And we've been hearing about government reform for a long time, and it really hasn't happened. Pharma had a big day bouncing off the indicators, and J&J, for one, had great earnings. We'll see what is coming. We started talking about data center. Gosh, probably back here, which is about 3 weeks ago. And definitely we're talking about it right here, which is about 12 or 13 trading days ago. Data centers remain strong, and when I think of data centers, I think of everything from the building, the power, the chips, the cooling, the memory, the SSDs, the infrastructure, the grid. There's so many things that are tied to performance of the data center ETF. What else do we have here? I think we're about done. ITA is another one that I made a big call on as it broke out and been talking about it over the same period of time. And it continues to do well. It had a one-day sell-off and reversed. With those Carmen, KRMN earnings, my guess is we go higher. So I'm still holding on to my HWM. Congrats to those that took that trade with me. I know somebody's already commented, I know who, but I don't usually name names, about it in the remarks section. And by the way, give a guy a break. Click the the up thumb so I can maybe get some distribution by YouTube. Give me some comments. What should I do differently? Do you like what I'm doing? Are you making money on my trades? Do I suck? Give it to me. Just do something. Right now I kind of feel lonely. All right. What else we got here? Subscribe and hit the alarm. We're back to Amazon. So we are 20 minutes in and probably 5 minutes at least. 7 minutes is ad-libbing. So after 13 minutes, I have a pretty good feel of what the market's doing, where the leadership is, less risk today than we had yesterday, and I'm still leaning towards the long side. So I go to my JAS layout, I go to the top-down view, and I do them by percent just to see what was moving today. And it's energy, industrials, and discretionary, consumer cyclical. Here are the leading industry groups and the leading sectors. I can rank those by percent return as well. Oil, gas, 2, 3, 4. And then I might rank this by move today, the stocks that come out. And then I might want to filter less than 5 and 500,000 shares to make it a smaller list. I got 172 stocks that are the top industry groups and the top sectors. So I just put my clicker there and energy and digital, just keep going, see if I see something that I likes. LC2, Seadrill broke out after a flag. All right, it's something I might be interested in. Not when I screw the pooch on the line, so let me get rid of that line. Hit delete, not escape. That might help. Let's try that again, Jeff. Highlight, click on it, pull it back. We're breaking out. What's the high jump? It's 100. I can't chase that. Why do I sometimes not pay attention? Because sometimes we're just above the 200, but we're running away. NESR, nice run. Comstock CRK, I think they're in the gas business. Oil and natural gas primarily in North Louisiana, East Texas. 6.1 trillion cube feet of natural gas equivalent of proven reserves. If natural gas is rallying, this may be one of the stocks that you want to be interested in. OII, now we're starting to look at some oil services companies. I have Schlumberger, which had a really good move today. Pump, I like Vermilion Energy, another energy producer. Helix, a services company. A GPRK, I think this is a oil production company. I'm looking for charts that look attractive to me. I see a lot of really wild charts. Now this one looks great, but it's extended. Cactus is in the services side. Weatherford. Again, you could argue that I like buying flags. Okay, to me they're high likelihood of success. Well, we did a flag breakout. We're not totally extended. Massive volume. Earnings are not to February 3rd. Let's take a look at the fundamentals. Going to have $1.42 versus $1.50. Well, that's not that exciting. Pays minimal dividend. So again, I'm looking at the leaders today and looking for things that have a good looking chart. RXO breaking above the 200. This one has a good looking chart. It had a big gap up here and consolidated. It looks like it's getting ready to break out. It's not extended. Relative strength and OBV look good. Earnings are not to February 25th. Notice we put the earnings on the chart. Somebody asked during one of my webinars. So I might go down this list. Birkenstock, no. OIS is oil services. Woo. Hard for me to chase that. You know what the high jump's going to be? 100. One of the ones that I like in this space is EXE. Take a look at that one. Pulled back pretty hard. Kind of looks like natural gas because it is predominantly a natural gas play. It used to be called Chesapeake. So that's top down. That's one thing that I like to do is look at the leading groups and sectors. Sometimes you find, sometimes you don't. Now we created something really cool. Here is a massive list of ETFs. And if things shut down, I apologize because it is beta software. I use versions that aren't out yet. Now, this is interesting. I don't usually filter this. If I don't filter it, you can see there's 3,880 ETFs. But maybe we should filter it and only look at ETFs that are above $5 and have 500,000 shares trading. So we're not trading things that are illiquid. And let's just look at perhaps 2-day momentum on the ETFs and just take a look at some of the ones that we see. ARCA Biotech Index Funds. It's kind of interesting. I'm not saying this is a good thing, but I don't know why I'm always looking for megaphones, but is this setting up to have a megaphone? And megaphones are not necessarily good things, but you could argue something like this. I don't think so, but if it is, it's going to come down and touch, which is what we don't want. DPST, Regional Bank Bull, that looks good. Now let's say I wanted to do that. I'm not going to go through a bunch. I'm tired. You guys are probably tired of hearing me already today. Watch the magic. I click on, uh-oh, where did that go? Well, I'm not going to show you the magic. There is supposed to be something for me to click here that will divide up and show me. We must have turned it off. Will show me where the constituents are. Well, golly gee, let's take off the filter, see if that changes anything. Or maybe what we got to do is let's highlight DPST. Yep, he took it away from me. Gosh darn it. Well, what we've got is we've built a new tool. I don't know why it's not showing here. I'm using the right version, I thought. And that tool will take all the ETF components in an ETF. So if we were interested in DPST, or another one that we might be interested in for regional banks is KRE, we have the ability using that tool to drop down and show you all the ETFs. I apologize for that. I bet I did something wrong. Oh, I wonder if I go to top down and look at that. Let's see. Not top down. Let me go back to the impulse. It's back. All right, so let's do that again. Let's filter. I have to go back to my impulse to do this. Let's filter for $5 and 500,000 shares. Okay. Let's go down and find KRE. And we're working a way to search it, so you don't have to do this. This is silly. But right now it's still in beta form. So here's KRE. And then if I hit this right here, give it a second to run. Oops, I hit KBE, KRE. It should, here we go. Here are the different banks in KRE, and then you have the ability to put them into a new directory, rank them by whatever, let's rank them by 5-day moves, and you can start looking at the banks and see if any of them, Ozark looks okay, looks reasonable to you. So another way of top down is going to be using the ETF. There's a couple in there that look good. Lastly, for those of us that don't want to spend the time doing top down, and in my minute and a half left, all you got to do is be in the impulse list, take away that thing, go back to base, which is the 3,700 and so stocks if I take out the filters, and then you go into my scans and let's just look at A+, hit OK, and let me show you 2 stocks in healthcare that I'm interested in. CVS. Why am I interested in it? Because I kind of think we're breaking out there. And I probably could have put a horizontal thing in there as well. So I think CVS, and it's got decent seasonality and earnings aren't to February 10th, is setting up for a decent move here. You look at what we had today was double momentum, which is the key signal out of a squeeze, good relative strength in OBV, and it had a CPR. The other one I liked was United Healthcare. And similar setup, breaking above the 200, double momentum, good relative strength in OBV. So I think there's plenty of stuff in the energy patch, especially services and natural gas plays. I think the regional banks look interesting, but I kind of think the low risk play here is United Healthcare and CVS. Notice on Tuesday's weakness, this one did not go down. And looking at CVS, which has been in a tight range, it closed higher on the day. Have a great day, and there you go, 30 minutes of complete market evaluation. The power of top-down investing and market MRI toolset.